Hi, everybody. This is for my Accounting 204 course, Federal Tax. We are in, let's see, Module 6, so Week 6, or not Week 6, Module 6, Chapter 7. So we're past the halfway point. This week we are, and let me share my screen and open up my slides here. We are getting, we're over the halfway point. We've been talking a lot about income deductions from, deductions for AGI and from AGI for both personal and businesses, or for individuals and business income. In Chapter 7, we talk about losses. So certain rules that we have in the tax code for losses for both individuals and businesses, especially individuals that own companies. And how they can treat these losses. So I've talked to a few of our students here in the class. Not too many questions this week, but there were a few questions on net operating losses in the carry forward rules and how to calculate that, that deduction on the income. So wanted to get into that. First, before I begin, the rules did change. So there was a law passed in 2017 that had a big change. It was the Jobs Act in 2017 that had a large change on really the tax code in general. One of them was the net operating losses. So prior to taxable years, prior to 2018, the tax rules regarding operating losses were pretty standard, and they were in the code for some time. Was that you could go back 2 years, meaning if you had a loss in a tax year, you could take that loss to offset against any income. Well, sorry, I take that back. There would be a loss in the current year, so you wouldn't pay taxes in the current year. But if the loss was significant, you could go back up to 2 years and restate your tax returns, and to deduct that loss from the previous year's tax return, you would get a potential refund. So that was the goal, was to help companies that had a loss in a given year, maybe restate and get back some funds there. Or you could carry forward the losses for 20 years. And that was the old rules. The rules changed. So beginning in tax years 2018, so you can no longer go back. The carry back is not allowed, but you can carry forward indefinitely, right? So you can carry forward these losses indefinitely, and they're grouped by loss year. So if you have multiple years, then you go back to the oldest year, or the year that caused the loss first, and you start to use up that net operating loss carry forward against any future income. And then once that year is used up, you go on to the next year that you had a net operating loss. So you could have each year that there's a loss, you group it into that taxable year, and you can then kind of tap into those losses on a grouped by tax year in the future. So it's a good benefit for businesses that are having taxable losses, that they can use that to offset any taxable income in the future. What this does too, it causes any big lumps where maybe 1 year you have a large loss, the next year you have, and that loss is causing an economic impact to the company. Let's say you turn it around next year and you have you actually have some net income, to pay taxes on that income when you might have a large loss in the previous year and you're still trying to recover as a company. These rules allow the companies and individuals that own those companies on a personal return to offset some of those future gains with those losses, to maybe recoup some of those losses that they incurred. So and there's lots in the, if you read the news in the last couple of years about if there were individuals that maybe, or companies that took too much of advantage of that rule. But overall, the net operating loss carried forward is a pretty positive, in the professional world, it's pretty positive taxable incentive. So Let's go through that because there were a few questions on the calculations. We had a few problems towards the end, problems 11 through 14 or 10 through 14 in Cengage that asked a lot of these questions on operating losses, and I had a few emails about them. So let's talk about that. So net operating losses for any year can be offset against taxable income in other years. So only losses from the operation of a trade or business and in casualty theft losses can create a net operating losses. So the losses don't apply to individuals. However, if the individual owns a company and it's a pass-through entity, these business losses will pull them in on their individual return, and then on a corporate return, which we cover later, you can use these losses as well. So again, net operating losses for any one year could be offset against taxable income of other years, and the offset is indefinite. There's no longer a time restriction where you can only do it up to 20 years. That's removed after 2018. So in general, a net operating loss could be carried forward indefinitely. We'll focus on the new rules. Like I said, prior to 2018, there was a 20-year limit. There is a net operating loss deduction limit. So in general, if you have a net operating loss, it's limited to 80% of the taxable income determined without regard to the NOL itself. What does that mean? So that means that if in 2021, you have a $5 million loss, right? So in 2021, you don't pay taxes because you have a $5 million loss. If the following year, right, you had $1 million. So in 2022, you have $1 million of income. Based on the net operating loss rules, you can tap into the 2021 $5 million loss to offset against the 2022 $1 million income. And the deduction limit, the 80%, would mean that you would take the $1 million income, multiply it by 80%, which means you're allowed to take up to $800,000 of the loss from the prior year to deduct from the future year income, which means you would reduce the $1 million income by $800,000. You get a deduction. So now your taxable income would be $200,000, right? And for 2021, if you were to use that carry forward deduction from your net operating loss, you would start with $5 million in 2021. You would use $800,000 in 2022 because you had $1 million of income, which was limited to the 80% deduction. So you used $800,000 in 2022. In 2023 and beyond, you have $4.2 million of 2021 losses that you can use in any year up to 80% of income for any income generated. So that's when I said before that the losses are aggregated and segmented by year, and they're grouped by year, and you're allowed to tap into those losses in the future. You get to go back to the oldest year where you have losses, right? And you have to use them up first. And so you're allowed to use that loss in the future tax year up to 80%. So again, the example was $5 million of income $5 million loss in 2021, $1 million income 2022. You're allowed to deduct $800,000 against that income in 2022 based on the net operating loss rule. You reduce your net income in 2022 by your taxable income by $800,000, and that means that in the 2021 loss, you still have $4.2 million to use in the future years. So it's for qualified business income. There's some exemption rules which we can look at also for self-employment. So to compute the net operating loss, to arrive at the net operating loss for an individual, taxable income must be adjusted as followed. So no deduction is allowed for personal and dependency exceptions. The NOL carry forward from another year is not allowed in the computation, right? So you're not allowed to use previous year's operating losses in the computation of your net operating loss for the year, right? Qualified business income is not allowed for personal. So if it's a personal, the qualified business income is not allowed, and then capital losses and non-business deductions are limited. So we'll talk about in a minute about the limitation on capital losses, but just know that the capital loss limitation is $3,000 anyway. So when we talk about the limitation, we'll see some of it there in a minute. So the computation for the net operating loss, we take the taxable income shown on the return, right? And we add back any of these items here. So personal dependency exceptions, net operating loss from another year, right? Any net operating loss from another year, we add back. The qualified business income deduction, the 1920x1080 that we talked about, excess of non-business capital losses over capital gains, the excess of non-business deductions over the sum of non-business income plus capital gains. And then 6 is the excess of business capital losses over the sum of business capital gains plus the excess of non-business income of net non-business capital gains. So a wordy one for chapter 6, but it's not that complicated. The note is that the add back from 4 to 6 will not exceed $3,000. So 4 through 6 are these capital loss rules that we learned about in the previous chapter. Basically what we're saying is that we're going to add back up to $3,000, but not more than that, because there's a limit on our capital losses that we can use, right? So we had a limit of $3,000 of capital losses that could be used for any, that could be used to deduct from income, right? So make sure that we know that. So 4 through 6 will be capped at $3,000. So the computation for the income for which the year the net operating loss is carried. So take a look at here for the computation. So taxable income and income for tax of the year that is determined by including the NOLs, the deduction for AGI. So again, this deduction, so when we carry it forward and we're going to deduct the 80% of the loss from the previous year. So if we're in the current year, so in our example before, we were in the 2022 year, that deduction is going to be for AGI. So an above the line deduction. It's not an itemized deduction. It's for AGI. It's above the line. And that's really the bulk of, we covered here we covered on the net operating loss that it's segmented by year. You have to use the oldest year first, which is what the rest of the slides cover. So please let me know. So you'll view the video, take a look at Cengage. Any questions on net operating losses and how to deduct them from income, please let me know. I would be happy to help. Thank you, everybody. And I hope that you enjoy the rest of your